This video is based on the technical analysis of US30, which we also refer to as Dow Jones, and at this point we are on the weekly chart. What we will do in regards to the analysis of US30 is identify the market structure, market patterns that we should be paying attention to, key support and resistance levels, important candlestick patterns, as well as levels at which we should be looking for potential buy and sell opportunities. Also, before we get into the actual analysis, I just wanted to mention that over the last 2 days or so, we saw Moody's cut ratings of about 10 US banks and also putting others on their watch list, right? So this will have, or rather has had, a negative impact as far as the Dow Jones index goes, and over the next couple of weeks we may potentially see Moody's affecting the movement of Dow Jones, right? Also, remember that we're still in earnings season, and next week we have Home Depot as well as Walmart releasing their earnings, and both companies are listed on the Dow Jones index, and this will affect the performance of this particular index, as I've mentioned, right? And again, later on today we have CPI coming up, and needless to say, this too will have an effect on US30, and we just need to be careful, right? Also, the last thing that I want to mention is that we've partnered with Avatrade. Avatrade is a reliable broker that we use. They're reputable and they've been around for quite some time. They offer forex, crypto, commodities, as well as options. To open an account, simply click on the link in the description and you'll be good to go. And so guys, let's not waste any further time and get straight into the actual technical analysis of US30. And as I said, we are on the weekly chart, as you guys can see. And on the weekly chart, the first thing that we can see is that we have price, or the market, being at a very strong level of resistance at that level, and that is because, needless to say, we've had multiple rejections in and around that area. And what this means is that we may potentially see the market move further down to around that level. Why do I say this level? I say that level because if you were to go to the daily chart, you would see that we actually have a very nice W structure there, which has a neckline at that point. And you guys know that whenever we have these W structures, we want to see price breaking to the upside of that neckline, coming back to the neckline to give it a test. And generally speaking, where we have that neckline is where we look for those potential buying opportunities, especially if that neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? So what I'm saying, in other words, as I said, guys, is that your price from where it is actually move further down to around this level. At that level is where I believe we should look for potential buying opportunities, because at the end of the day, we are in an upward trending market, as you guys can see, and the market had also given us this very nice W structure, which started at that level more or less. And ideally, we want to see the market continue to move further up to close at that level more or less in line with where it started. Anyway, from here, let's head down to the daily chart and see what's happening down there. Just bear with me. And here we are on the daily chart, and just to recap, remember guys, on the weekly chart we said that the market at this point in time is at a very strong level of resistance, as we had multiple rejections in and around that area, and we said that we may potentially see the market move further down to around this level, and at this level is where we may potentially look for those potential buying opportunities. And that is because the market on the daily chart, as you can see, has given us this very nice W structure, which has a neckline at that point. And we said that ideally we want to see price breaking to the upside of that neckline and then coming back to the neckline to give it a test. And as I said, at that level is where we would look for those potential buying opportunities, especially if the level aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? Now here we are on the daily chart. What else do we see on the daily chart? On the daily chart, we can see that the market, as much as it had given us this very nice W structure, with this being the neckline rather of that W structure, we can also see that it also gave us a very nice M structure over here, which had a neckline at that point more or less. And what happened was we saw price breaking to the bottom side of that neckline and then going back to retest the neckline. Unfortunately, the neckline was not able to hold price, and we saw the market continue to move further up, making this M structure at this point in time no longer relevant. So what else do we see in regards to the daily chart? At this point, I don't see much, guys. But also remember that within this block over here, as I said, we have an M structure. And what normally happens with M structures is that a lot of traders and investors usually sell on that second leg of that M, and they place their stop losses just above. So it may be that this M over here is a bit of a trap, in that we may potentially see the market move further up to stop hunt all of those stop losses that are located in and around that area, right? But myself personally, I would love to see price from where it is actually move that down to around this level, and at that level is where I would look for those potential buying opportunities, especially if we have any key numbers that are in alignment with Fibonacci at that level, as this level is a very strong level of support, and it's also the neckline of, as I said, this very nice W structure. But what else do we see on the daily chart? Let's just zoom in a bit. I don't see much really on the daily chart, but I also want to mention that on this chart we have this candlestick over here, and what it is a bullish candlestick with a small body and quite a long upper wick, and it tells us that at the top where that wick ends, there's a lot of liquidity there. And as you guys know by now, liquidity is actually money that needs to be triggered by the market at one point or another. To add to that, we also have this candlestick over here. It's very much similar to this one, in that it too is carrying a lot of liquidity at the bottom, and it indicates that we may see the market actually come back to that level, right, to trigger that liquidity, and then perhaps actually move further down to test this very nice neckline of this W structure, and at that point we might see the market move up, right? Anyway, let's head down to the H4 chart and see what's happening down there, right? And here we are on the H4 chart, and just to recap, remember on the daily chart we spoke about how the market had given us a very nice M structure over here with a neckline at that point. Price broke to the bottom side of that neckline, went back to test the neckline, but unfortunately the neckline was not able to hold price. So I can just zoom in, right? And we also mentioned that because we have this very nice M structure, a lot of traders and investors actually sold at this point, placing their stop losses just above, and that we may potentially see the market move further up to trigger all of those stop losses, as well as the liquidity associated with that candlestick that I spoke about that's carrying all of that liquidity, as liquidity is actually money. But here we are on the H4 chart. What do we see? In regards to the H4 chart, we can see that the market is actually in a downward trajectory, as you guys can see. And as much as that's the case, guys, remember I said that we want to see ideally price move that down to this level, and at that level is where we would look for those potential buying opportunities, as we have that very nice W structure which has a neckline at that point. But here we are on the H4 chart. What else do we see, guys? On the H4 chart, as I said, guys, we're in a downward trending market, as you can see, but the market has actually given us what seems to be a very nice inverted head and shoulders pattern, with this side being the left shoulder, this being the head, and this point being the right hand shoulder. And remember also that whenever it comes to these inverted head and shoulder patterns, what normally happens is that a lot of traders and investors buy on that shoulder and place their stop losses here as well as here, right? So we have a lot of money stuck here in the form of stop losses, as well as just below the head. So we may potentially still see the market move that down to trigger all of that liquidity, and then potentially move further up, or even continue to move further down to where we have that neckline of that W structure, and at that point is where we may see the market move further up. But in as far as buying or selling at this point, I don't see much, because the market is very much mixed. The market is very much mixed because, guys, look, as much as we have this inverted head and shoulders pattern, we also have another head and shoulders pattern over here. You guys can see that, with this being the left shoulder, this being the head, and this being the right shoulder, right? So what this means is that buying or selling in as far as the H4 chart goes is a bit tricky. Buying or selling is tricky, and myself personally, I would not go in